Hello guys and welcome to the 93rd edition of the Trading Opportunities webinar. Let me have a quick look at the stream, if it's going live at my end or what. Alright, so it looks like the stream is live on YouTube as well as LinkedIn. So before any further ado, let's just get started with the stuff here. First of all, let's get done with the legalities here. On screen you can see the disclaimer. All content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading or investing or any other purposes, you yourselves will be liable for your profit, your loss, or loss of profit. Rest of the stuff you can read by yourselves. It's all on screen. With that being said, let's head over and let me give you a very quick introduction, guys. So my name is Nirav. I'm the admin and owner of the website 50eyes.com as well as the YouTube channel 50 Eyes Market Analysis, where I have been sharing my views on various different markets since 2015. And what we are discussing here today is the 93rd edition of the Trading Opportunities webinar. This webinar is conducted every Friday at 2 p.m. GMT or 7:30 p.m. IST. So you just convert it to whichever time zone you are in. Right. In the past 92 webinars, we have captured 187 trades. And in the last 3 webinars, consecutively speaking about the 91st, 92nd, and the 90th, all of the discussions which we have done have played out. That is all of the 6 setups discussed in the 90th webinar, all 6 setups in the 91st, and all 6 setups in the 92nd webinar have played out. And that makes like a winning streak for the last 3 weeks. And we have captured 18 trades altogether within the last 3 weeks. Everything discussed has played out basically. Right. We will look at whatever we discussed in the 92nd webinar and check it in our presentation today. Keep in mind, this webinar is broadcasted live on YouTube as well as LinkedIn simultaneously. And those of you who are in the live broadcast can put their comments in the comment section if they have any questions or queries. Okay, with that being said, let's move over. I'm also the author of the book Think with the Markets, which is available on Amazon's Kindle platform. I also have a course, video course, which has 1,500 plus students. You can also check the details for that in the on the website by visiting 50eyes.com and just check the courses section, Elliott Wave course. And lastly, if you are interested in getting the updates of the markets which we discuss here continuously day in day out, along with my own trading and their reasoning analysis, you can request details for the Slack private group by heading to 50eyes.com/contact us and selecting the subject matter as requesting details for Slack private group. And extremely important that I've been keeping a track record of all the analysis that I do. Here, as you can see, we have it takes a little bit of a time to load up. We have these Google Sheets, which contain details of all the trades that we have taken, not the trades, all the analysis that we have put forward on YouTube. So as you can see in 2016, these were the instruments discussed. This was the analysis. This was the outcome, targets achieved or not achieved. And we had an accuracy of 83.34%. 2787.5, 2018 84.61, 1984.88. And as always, you can just check the date here, the instrument name, and what was the analysis on the instrument, the link for the video, and the outcome of the analysis. Everything is listed here. 2020 is 88.52. Date, name of the instrument, the analysis, and the outcome. Everything is listed there with the video links. Same goes for 2021, 82.22. And since 2022, we have been doing weekly webinars for which we, as I just mentioned, we have captured 187 trades in the last 92. With that being said, we'll now proceed with the actual webinar. And as always, we'll go from the chart of EURUSD followed by crude oil, gold, S&P 500, Nifty 50, Bitcoin, and in the end, we'll discuss Bitcoin, obviously. With that being said, let's now head over to our actual content here. So first of all, if you guys are there in the live chat, make sure to say hi or hello. But with that being said, let's now first head over and load our first chart of euro. Let me see if this is the time frame. Yes, let's head over to a little bit higher time frame for context. And what I like to do is I like to just check quickly what our discussion was in the last webinar. And one more second. Let me just correct a few things here. And how the last webinar discussion played out before we discuss things in the current webinar. And one more second here, guys. Let me hide this. So we seem to have a comment already. Yes, oil did reverse from our suggested level literally precisely, and we will discuss it when we go to oil. Thank you for pointing that out, by the way. And by the way, all six discussions, if you are not listening in from the very beginning, all six discussions that we made in the last webinar and the last to last and the last to last have played out. We will look at all of that. But anyways, now getting back to our current chart or current point of discussion, we have the chart of Euro USD on screen. And what I would like to do is, as I said, we have a very, very quick look at the last webinar. So here is the 92nd webinar. I'll just open it up and give you a rough idea of what we were discussing in the last meeting, which was, by the way, conducted 8th of December 2012. And let me just put it on mute and change the video quality to 1080p. Always keep the quality at 1080p. It looks better on these black backgrounds which we use. So here is the discussion on Euro USD which we did in last webinar. See somewhere here. So this is the main idea which I was discussing in the last webinar. The idea was, as you can see, we were assuming that this was the wave 3 here, and we were assuming that this was an A down, B up, and C down for a wave 4 expanded flat. And the idea was that I will be considering longs above 1.08456, or let's just say 1.085 level. I'll just explain the idea again here. The idea in the last webinar was, let me change the color here. So in the yellow color, you can see my current drawing. The idea was that this was an expanded flat structure. And once an expanded flat is complete, we will see a leg up again, which will retrace and take out the last high. So that was the idea or the main theme. And I was a bit cautious here because this wave C had expanded a little bit too much than what I had previously expected. So the idea was to wait for some evidence on the upside before heading for longs. Now let's see what happened in the actual on the actual chart. So this is the actual chart. Again, this was the same count which we discussed last time, and as you can see, this was the expanded flat I was pointing out. A down, B up, and this is the C down for the expanded flat structure. And as you can see, this market has actually indeed gone up and still has to take out the last high, but it has shown extreme signs of bullishness, of course, right? So it is moving as per our analysis, literally picture perfect to the point. And if you were following me since the last webinars, you would have already known what to do and when. Right now, getting back to the current count, we want to discuss this market, specifically this leg, right? So now let's focus on this leg on the 15-minute chart. Let's see what's really going on here. So what we have over here is a simple impulsive count in the other direction. What I have, I'll just remove this counts and just show you guys. So we have the one here. This is the point of reference or the starting point for this count. So I'll just type that out for you guys. This is the one here, and then the wave 2 here. We just quickly check, and yes, the three here. So basically, this is the third wave. We are in a wave for pullback, and then we expect a fifth wave up. Those of you not much familiar, this basically is an impulsive progression in Elliott Wave terminologies, which is the advanced form of price action analysis, which I use and have been using since a long time with exceptional accuracy for my trading, of course. So what basically this suggests is that an impulse will look like this. It will have five waves. Wave one goes up, two retraces a little bit, or maybe even deeper, but not more than 99.9. Wave three goes up, wave four retraces a little bit, and then wave five goes up again. So if you compare this rough idea on the right hand side with the actual chart, you will quickly realize that this is the wave four we are considering as possibly complete. And if it really is complete, then indeed we are looking for next leg up. More points worth noting are that the wave 4 will generally retrace around 38 dot retracement level, and this is the 38 dot retracement line, by the way. And this was obviously drawn beforehand and already posted in our Slack private group. But just to point out for you guys who are joining us in the webinar, who are not in our Slack group, that this is the level, predetermined level, which we already were aware of, would that would or could act as a reversal level. Seemingly, it is working out right now, right? So basically, if I remove the counts again, basically what I'm saying is that this was a predetermined level, and we really want to see the market sustain above it. Anytime the market goes and sustains below it would be a sign of weakness on this counter, and that would also be a sign that our analysis is possibly wrong. So that's why what I'm going to do is place an alert below wave 4, which is expected to complete at the 38.2 level, which is coming at 1.09, roughly speaking. So we want to see sustenance above this 38.2 level line and possible move up. I'll be looking for or considering longs above this alert of 1.094. But let's just say 1.095 because rounding off things, obviously. So basically, that's what we are expecting here. Of course, wave 4 can proceed sideways, in which case it will just proceed within this box. I'll just draw it with a different color. So in this case, if wave 4 proceeds sideways, it will just proceed within this yellow box and then go to the upside. So long story short, we are expecting either a straight up move like this or a sideways move and then an up move like this. Both scenarios, we are just expecting upside, nothing new. And if we are wrong, as I just mentioned, if we see sustenance below 1.090, then we will say that we possibly are wrong and maybe something else is happening which we do not know. Right. So that's about that for this analysis. And let's now head over to the next one. Hello, Sushil. Nice to see you back in the webinar. So with that being said, let's now head over to our next chart of crude oil, CLCL. Again, this one also worked out precisely as per our analysis, and we will of course check that right now. So let's first quickly check that in our past webinar. So let's quickly check where is crude oil being discussed. So somewhere around here, we are discussing somewhere around here, we were discussing crude oil in the past recording. I'll just quickly switch back a few seconds. Yeah, so here it is. I've just paused the screen here. So as you can see, Sushil's comment I was highlighting right now, and his comment is also highlighted in the last crude discussion. Funny coincidence. So anyways, the discussion basically was that we are heading down possibly as an impulse, and I was expecting wave 4 to go up. I think the level is mentioned here at 72.272, and then we were expecting a reversal from this market, right? So basically, upside till 72.27, and then a reversal is what we were expecting. Let's now see the actual chart. Let's go a little bit higher time frame. So this is 8 December when we were discussing that chart, right? 8 December, 8 December, 8 December is here. So somewhere here we were discussing that chart last time, right? And 72.27 is somewhere here. Somewhere here was the reversal level. So the market, as you can see, has reversed a little bit below it, but that is things like that happen now and then. These levels are never that precise. Sometimes it will reverse a little bit above it, sometimes a little bit below it. So overall, the reversal was quite satisfactory. Our expectation was that this market, once it reverses, shall take out the low, which was at that point in time coming at 68.95. Here, this low is what I'm talking about. Market has done that. So basically, this analysis on crude oil also worked out precisely. And again, if you are not listening to this webinar from the beginning, I was just pointing out that all the analysis discussed in all last three webinars, the 90th webinar, the 91st and 92nd webinar have played out. So we had 18 setups all discussed live in front of you guys publicly for free. All of them have played out. So again, keep attending these webinars live and obviously keep sharing them. We still have very low views. The last one I don't think even crossed 500. It was around 470 or something. So anyways, now heading back to our discussion for the current time frame. I have a small short position on this market. What I'm expecting is that this market has now gone up for a wave 4 CN degree. This is the CN count I'm talking about. And the expectation is that it has gone up for a W, an X, and a Y, right? And it is precisely going to the 38.2 of the last leg down for wave 3, this leg down basically. So if that is the case, then by the way, it is reversing sort of seemingly reversing exactly from the 72.412 level, which is the 38.2 level for this leg. So if this count is correct, then we don't have to worry about anything. But I have simultaneously placed a stop loss at, let me check my Slack. So I have placed a stop loss at 72.37. And in case the market hits our stops and goes to 72.50, I will reverse the position to longs considering the green count. So this was all posted in Slack live, of course, today itself. So we'll check that now. So what I'm basically saying here is that this is the main count. If the market goes here, that's good. That is what we are expecting. Simultaneously, I have placed my stops. If the market hits the stops and takes out this alert line, then I'll reverse the position to longs. Why would I do that? Let's have a quick look. Considering the green count, this is the alternate count I have, right? So keep in mind, market analysis is all about preparedness. You need to be prepared about what's happening and what can happen. Having just one analysis or one view of the market is not gonna work, because that just means you are just looking at one side, and when you consider only one side, then that's when you lose. So basically, this is our alternate count or the second count which I'm talking about. Let me just remove all the stuff. So if the things don't work out, if our stop loss is hit, then this is the main count, or this is the count I will switch to or consider as the main count for this market, right? And in accordance with this, I will look for longs, right? For now, everything seems to be working out. So we don't have anything to change on this count. And this is also blowing through the green count survey for 38 retracement. So it is also suggesting weakness, or bearish count is the main count which I am currently playing. Right. So we are prepared for both sides, as I just said, where to switch the sides and why I have discussed. There's not much to add here. If this bearish count plays out, then this market should go lower or much lower basically. And if it doesn't play out, then we are heading up for a wave 5, and you already know the setup for it. I think that's about it for this discussion. I don't have much to discuss. I'll just point out the alternate view in yellow. Just this is the WXY count we are looking for, and then this is what we are expecting. So yellow count is, let's say, H1 bearish, and H2 is bullish, and currently we are short in accordance with H1. If it gets relegated, we can go along with H2. So that's about it for our view, right? And let me see if I have something here. There was a comment about it regarding our last analysis, which had worked out. One of our viewers has pointed out that it has worked out. Thank you very much. And we also checked it in the stream. And Jay is saying, "Hi Nirav, hope you're good. Thanks for analysis." And thank you, Jay, for becoming our subscriber and your good comment here. Right. So now let's head over to our next chart. What is the next chart here? Crude gold. And let's see what we were discussing about gold in the last webinar and what's our current analysis suggesting. So here is the chart of gold. And as always, before heading over to our current chart, we will now quickly look at the last one and see how things proceeded in our last webinar. So here's the recording for the gold analysis, and it is discussed around 30 something. So we'll just scroll over 30 something. And do keep in mind, guys, I do timestamp the webinars. So you can just scroll your mouse over the timeline and it will show which market is being discussed. So makes it pretty convenient for you guys. And also do keep in mind that doing these webinars, coming up with these analysis and putting it up in front of you guys takes a lot of time. It's not just 1 hour work, as you can see in the webinars. It's a what you call a very time consuming process. So I would request you guys to share this content with at least 5 or more of your connections. If you have what do you call connections on LinkedIn, Slack, or Discord, WhatsApp groups, whatever you use for your what do you call communication, just communicate it to the guys who are trading there and in the groups which are related to trading. So anyways, getting back to our discussion, this was the gold analysis. Basically, I was talking about the flat correction, and as you can see with these arrows, I was talking about the expanded flat structure, and we were expecting a 1 2 3 4 5. In this case, I'll just label it with the yellow color. I'm drawing over the past recording here at this point in time, and this is the count we were expecting. Wave 1 down, 2 up, 3 down, 4 up, and 5 down. This is the Elliott Wave flat structure. And in that flat, this one is basically called an expanded flat structure. And within expanded flat, what we really expect is the wave C. Once it's complete, we expect the market to just go up and take out the high. So what happened in that analysis? I believe I was short on gold live in front of you guys, and we also closed that short trade with about 22 points profit. I think that's covered here as well in the webinar. Here it is, live shorts is closed with profits. So you can check that live trade discussion here as well. And next thing which I recall is the market did go down for the C, and from there on we'll just do the analysis in our current webinar. So here is gold in front of you guys. I'll just go to the 4 hour time frame to show you in accordance with what we were discussing last time. So yes, this is the point of reference, right? And this is the analysis. And as I said, A, B, C down. This is a flat correction in Elliott Wave technologies. This should look like this. So this is the A, this is the B, and this is the C, right? Now the point of discussion becomes or comes out to be here. This C wave is what we are interested in. This C wave is what we are interested in, right? So because this C wave, I'll just show you by going to 15 minutes. It's better that way. 1 hour should be better. Yeah, as I was saying, this C wave is the point of discussion here, and the simple thing is that we can already count an impulse till here. Now, keep in mind the C wave is supposed to have 5 waves inside of it. Impulse has 5 waves inside of it. So basically, now two things become clear here, or two possibilities become clear here. First is that the wave C is complete. in which case this market can just go up and make new lifetime highs. That is, go higher than what is this 2144 and make new lifetime highs. Second thing that becomes clear is that this C wave may still be continuing. How so? Let me just squeeze the chart and get back to our realm of possibilities. Now, keep in mind an impulse is nothing but 5 waves. So this will be counted as a 1, a 2, and a 3, and a 4, and 5, right? However, it is also worth noting that the 5 waves inside an impulse are fractal in nature. So the wave 1, if you magnify this wave 1, it will again have 5 waves inside of it. If you magnify this wave 3, it will again have 5 waves inside of it. And if you magnify this wave 5, the same goes there, 5 waves inside of it. So keeping that analogy in mind, if we look at this chart right now, it is possible that this leg which got completed here was not C but just the wave 1 of the C. And then there will be a wave 2 of the C, and then there will be a wave 3 of the C, 4 of the C, and then 5 of the C. So with that being said, the possibility of downside is not eliminated right now, and I do not have any clear way of determining which case scenario is currently playing out. So long story short, gold, I'm expecting that wave 2 might still be continuing, and in wave 2 we expect a zigzag correction at this point in time. A zigzag correction in Elliott Wave terminologies will be something like this. If we expand the wave 2, it should look like this. First leg is called an A up, correction down is B down, and then leg up is called a C up, right? So in this particular case, let's get to the real chart and expand upon it. 1 hour is enough. So in this case, we are expecting that this is going to be the A up, this is going to be B down, and then C up if this is a wave 2, right? So we expect the market to take resistance somewhere between 2080 to 2060. I'll just type that here. So this is where we expect this market to take some resistance, right? And once that level is hit, we can see some reversal. Now here is a small clue we can have from this market is that if the market sustains above this 2060 to 2080 level or range or whatever you would like to call it, then we can consider that the bullish scenario is showing some what you would call strength or possibilities of happening. So above this range, this white resistance zone, we expect bullish activity can take place as long as the market sustains within it or below it. We do not have evidence for any bullish activity on this counter. So long story short, gold above 2060 to 2080 range, we will look for longs. As if the market sustains within or below it, then we do not consider longs as a strong possibility. And keep in mind, we have been able to capture, for the most part, this leg up. And by the way, all of the moves were captured within the live webinars. This is, by the way, the daily chart of gold. And then major parts of this leg down, and then again parts of this leg up we have captured, as well as, of course, this fall, some parts of it. All these discussions were done in the live webinars, which I've been doing. And this is a 93rd iteration, so it's not like I've been doing from yesterday. I have a long history of it. So with that being said, let's now put gold aside and move over to our next chart of S&P's 500. And S&P 500, again, one of the charts which played out our discussion, or whatever we discussed played out, I should say. I'll just go to, let's say, a 1 hour chart. Where's 8th of December, somewhere here. So our last discussion on S&P was somewhere here. And before proceeding with the current counts, let's just quickly check what we discussed last time and how the market has proceeded. So here is the recording for last webinar. Let's check S&P. So here is the count on S&P. The idea was that this is a wave 4. I'll just draw on top of this recording just to explain what our last analysis was. So my drawing on top of recording is in yellow color. So the idea was that this is the wave 4 and then the market will go up. There was another idea that the wave 4 is already complete here and then the market will go up from here, right? Both of these ideas were discussed in the last webinar, and basically the conclusion was that above this alert line, whatever this was, I think it was around 45.92, 90 something, 45.93, I think. Yes, so somewhere around 45.93. If the market goes above it, we will look for longs. So longs above 45.93 was the idea. So this was all discussed and recorded in the last webinar, live of course, and you can obviously check for yourselves around 37, 36 mark somewhere. So now let's head over to the live stuff and see what the chart did. So here's the level of 45.93, 93 here. Here it is. So as you can see, the market did go above 45.93 and then it took off. Took off for new highs and achieve our upside targets or upside levels, whatever you would call. So again, one of the analysis that worked out perfectly from our last webinar. And by the way, guys, if you are live in the webinar or watching it as a recording later on, do not forget to hit the like button and do not forget to share this content. I request that you guys put some efforts and get the word out there, because I've been producing this quality stuff all for free for you guys for a long time now. This is 93rd edition, and we definitely need to see more views on these webinars. It is not good enough to get 500 aroundish views when I'm producing content which is hitting winning streaks on and on every week. As you can see, scrolling at the bottom of this webinar, in the last 3 webinars, all the trade setups, all 6 in each webinar, we discussed 6 things. So since the last 3 webinars, all these things have worked out. 18 trade setups, all of them have hit our targets and moved as per our analysis. So continue sharing the content with at least 4 or 5 of your contacts so that we can reach more and more people. And of course, if you are interested in getting my live updates for the markets, you can always head over to our contact us page here, 50s.com/contact us, and fill in the request by selecting the subject matter as requesting details for select private group. Now getting back to our analysis of S&P's 500, what I'm seeing here, let's look at things now. Of course, the last one played out, but we are more interested in the current situation. So in the current situation, what I'm assuming is that we are heading in an impulse from this point of reference, which is the price level of, what is this? 4544, right? So we are heading up in an impulse from the price level of 4544 is what I'm saying. And from here on, what we can see is wave 3 here, and then wave 4 is what we are seeing proceeding. So what I'll do is I'll quickly put our drawing over it, and then we can discuss things by removing everything from this chart. Right. So this is basically the main count we are following. So if you are familiar with the Elliott Waves concept, which I keep repeating over and over, this is the advanced form of price action analysis, which I use in my analysis. We are currently in an impulsive progression, and an impulse, as you already know, we have 5 waves. The first leg is called a wave 1 up, second is called a 2 down, next is called a 3 up, and 4 down, and so on and so forth. We have the 5th up, right? Now, there's another characteristic trait, fractal natures of Elliott wave, which suggests that wave 1, 3, and 5 will have 5 waves inside of them. So basically, if we magnify this wave 3, which starts from the end of wave 2, we will have dot 1, dot 2, dot 3, dot 4, and dot 5 inside of it, right? So we can write that here. Now that we have that stuff over here, we compare it with the actual chart. We figure out that we are currently over here, and that we are currently progressing in the dot 4. Now we have already determined the important levels for wave dot force progression, namely the 38.2 retracement and 23.6 retracement levels, right? So I'll just mark them out for making this discussion simple enough. So 23.6 is coming around roughly speaking 4707, and 38.2 is coming roughly around 4688. So now that we have these levels quite clear, the progression now should be expected to proceed sideways within this yellow box. So that is to say the market will go sideways within this yellow box and then head up for a new leg is the expectation from this market. Right, currently it is within this range. It is proceeding sideways, so nothing out of the ordinary. Things will be considered out of the ordinary or not working as expected if the market sustains below 4688. Below this, we will consider that maybe something else is happening in this market, and we will at that point require a update for this count or a update for this analysis basically. So above 4688, we wait and watch for signs of bullish activity and long setups. Below 4688, we need to revise the counts and possibly look for sell setups maybe. But for now, our bias remains bullish, sustenance above 4688, and I have placed an alert with, but it is nothing clever. It's just at the high at 4740. Obviously, it's for a breakout trade, but expectancy is that if the market proceeds as per our expectation inside wave 4, then we'll get some trades before the breakout as well. But obviously, those things will have to be looked at in live markets conditions, and I cannot just mention them right now, actually. So that's about it for this analysis. And before concluding it, I think I have gotten some comment from LinkedIn, but for some reason, it is not showing that up on our feed here. So I'll do is I'll just quickly head over and see the comment. Okay. So what we are seeing over here right now is over what do you call fourth analysis which played out, right? And as I already mentioned, all six analyses we discussed in the last webinar played out. So the two remaining to be checked are Nifty 50 followed by Bitcoin or BTC, right? So that's what we'll do now. We'll head over to our analysis of Nifty 50 now. So here's the chart of Nifty. And as always, before going with the current discussion, we'll just one second. There it is, Nifty. So we'll just quickly check what was discussed on Nifty last time when we were doing the webinar. Here is the chart of Nifty, and let's see. And as you can see, the idea was that we were discussing the last webinar above. Oh, what do you call? Sorry, upside movement is expected, and the targets were 21327 was the immediate upside target. You can also see it written over here. 21327 was the upside target, and the arrow suggesting upward movement expectation. You can see the complete thorough count, of course, by visiting the last webinar on our channel, going to live and selecting 90-second webinar, which is basically what I'm doing right now. So this is the current count. And as you know, the last discussion was done on 8th of December. Sorry. Yes. It was done on 8th of December, right? Yeah. So the market did break the high, and 21327 was hit, which is somewhere here. So yes, the upside target was hit on Nifty as well, and it basically worked out as we were expecting, right? And here are some comments from our subscriber Sushil. You're predicting the future Nifty in USD. I'm just doing the analysis and it's working out up to the mark, as you said, Sushil. And thank you for the comment and pointing that out. We have some subscribers who are serious enough and taking note of everything we do. So, with that being said, now let's head over to our next analysis. Not next analysis, current analysis, and see what's going on in Nifty. Right? What we checked was what I said in the last webinar, nothing much. So I have multiple analysis here, but what I'm interested in is just talking about the super bullish possibility, which is currently suggesting a series of impulses in the other direction. So what's really happening here in the super bullish possibility? I'll just plot that and then remove everything from this chart so that we can focus on just that. Okay, so in the super bullish possibility, this is our point of reference around 20770 is our POR. From this point of reference, I'm assuming that we have a 1 up, 2 down, and then dot 1 up, dot 2 down, followed by dot 3 in the other direction. So basically, this is the fractal nature of Elliott Wave. We are assuming that the progression of 1 and 2 will have a 3 in the process. That 3 will have a dot 1, a dot 2, a dot 3, and a dot 4. Now within that circle 3, we are currently in the dot 3, and the dot 3 will again have 5 waves inside of it, and those 5 waves will have again 5 waves inside of it. So basically, just long story short, the wave 1, 3, and 5 have 5 waves inside of them. In this case, we have just expanding the circle 3's dot 3, and we are expanding that again, which is as you can see over here, right? So what we are expecting is that the market can go sideways a little bit and then up, and there is nothing really fancy here. We are expecting that, and our retracement is currently expected around 21,430, right? So we really want to see sustenance above 21,430, right? If the market sustains above it, then our account holds, and we expect the market to follow this rough structure which I just pointed out, these arrows which I just pointed out. If the market does not hold that 21,430 level, then maybe something is happening which is not as expected, and in which case, what we can say is we will need to relook at the market and redo the analysis, right? So long story short, 21,430, we look out for reversal at this level or above this level. If we see that, we look for long setups. If not, then something else is happening. There's nothing much to add here to this analysis. And we'll now quickly head over to our last count of Bitcoin or BTC before we conclude this webinar. And yes, guys, as always, I'm requesting you to hit the like button and share the content as much as possible, because providing all this analysis, doing this analysis, research, and presenting it to you guys for free and every week for these many years takes a lot of time and effort. And I would really appreciate if we can get more views. We are currently stuck somewhere around 500 views, and your efforts can take it to 1,000, 2,000, or even more. So kindly do your part and share the content with at least 5 of your connections so that we can see more views incoming, and I can produce more of this content for you guys. Right. So last is the Bitcoin chart, and of course, I'll just quickly head over and see what was discussed in the last webinar, and then continue our discussion from the current webinar for the current webinar. So here is the last chart of Bitcoin, but here is the recording. Let's see Bitcoin discussion. So this is the last discussion of Bitcoin. I'll just move it to full screen here. What we are expecting is a WXY, and two ideas were discussed. Straight up movement can follow, but the primary idea or the red idea, as you can see, was the primary idea, because the yellow idea is the secondary one in this case. So the main idea was that it will first go down and then go up. Keep in mind the price at around discussion level was 43916, and we can just head over back in time, 8th December. So this is our 8th December analysis. We were discussing this chart somewhere here. Let me see. So we were discussing that either it can go straight up, and the main idea was it will go give a sideways, sorry, downward movement and then up. So what really happened is that the fourth, I'll just check the price target as well, or level as well. Sorry, 43916. There it is, 43916 somewhere here. So the market did go lower, but it did not go precisely as per analysis, like not to the point, but it gave a retracement, and now it is sort of preparing for an up move. So this one also did work out, but I wouldn't say it worked out in the precise manner. Here, updation was required in live market conditions, and but that's the nature of analysis. Sometimes things play out smoothly, but sometimes they take their time. So, anyways, coming back to our discussion for the current market, what I think is happening is we seemingly are in a wave four double bracketed. So, basically, I'm expecting the market to go sideways. Let me show you sideways within this range, and then another up leg is expected on this counter. So, if this analysis is playing out, then we can see a triangle formation or maybe even a complex formation. But long story short, we will be looking for build up to the sideways or sideways movement, making a build up for longs is the expectation. And above 43989, or let's just say 44,000, is what we are expecting for market to shoot up and give us long trades on this counter. So no longs for now, right? And if the market goes below this level of 40,124, then maybe something else is happening on this counter, and we will have to take another look at it. Overall, wait and watch on Bitcoin above 44,000. We will look for long trade opportunities. Nothing new on this, just a sideways movement is what we are expecting, and wait and watch. That's about it for this analysis, guys, and thanks for joining in. As always, I request you share the content with the 4 or 5 of your contacts, or maybe more if you have more access to more people. And do not forget to hit the like button. And lastly, if you are watching it and like the content, you can always request details for our Slack private group for watching continuous coverage, or basically day in day out coverage, as well as my own trades, by heading to 50 @.com/contact us and requesting details for Slack private group. And that's about it, guys. And Luis is here now. Well, good morning to you, Luis. So, with that being said, since we have discussed everything, I'd like to say thank you to you guys for joining in, and I'll see you guys in the next one. Take care.